So, you've got this big vision, right? Maybe it's a shiny new warehouse or a bustling retail store. But you know, the real challenge isn't just dreaming it up, it's getting the money to build it. Well, today, we're going to break down exactly how you can fund that dream. Let's get right into it.
All right, let's start with this number, 11%. What's that all about? Well, that's the average annual return, the profitability you can expect from commercial property right here in South Africa. Trust me, it's a number that really makes investors sit up and pay attention, especially when you compare it to the alternatives.
And here's that comparison. You know, your typical residential property, that'll probably get you somewhere between a 5 to 8% return. But commercial property, it's up there at an average of 11%. That difference, that gap, that's the big incentive. It's exactly why it's worth navigating the more complex world of commercial finance. The potential reward is just on a whole different level.
So, how do we actually get there? Think of this as our roadmap for the journey. First, we'll look at the potential payoff of going commercial. Then, we're going to dive deep into your financing options and, crucially, how to build a business plan that wins. We'll even try to get inside the mind of the bank to see what they're looking for before we cover those last few hurdles to get you across the finish line.
Okay, first up, the payoff. What are we actually talking about when we say commercial property? Because it's not just one thing, you know? It's this incredibly diverse landscape of income-generating assets.
Yeah, this isn't just about four walls and a roof. It's about the businesses that operate inside them. We're talking about everything from retail shopping centers and office parks to huge industrial factories and distribution warehouses. And the one thing they all have in common? Every single one is built from the ground up to be an income-generating machine.
All right, so the opportunity is pretty clear. The potential is huge. But how do you get the actual funding to make it happen? Let's talk about the financial tools you're going to need for this job.
For a lot of people, the main tool is something called a commercial construction loan. Think of it like a specialized, short-term bridge loan. It's designed specifically to cover all the costs during the construction phase. And then, and this is the clever part, it usually converts into a normal, long-term mortgage once the building's finished. That all-in-one approach can save you a ton of time and hassle. But you got to remember, financing is definitely not a one-size-fits-all kind of deal. Lenders are going to look really closely at the size of your business. If you're a small business, say turning over up to 5 million rand, you can probably expect a pretty simple application process. But as you grow into a medium or large company, the financing gets way more customized, way more complex, and can even cover an entire portfolio of properties.
And beyond those standard loans, there are some pretty specialized products out there. You've got development finance for the short-term build costs. Term funding is just your classic long-term mortgage. Then there's something called mezzanine debt, which is this really cool tool that kind of bridges the gap between your own cash and the bank's loan. And of course, joint venture financing lets you partner up to share both the risk and the reward, which can be a fantastic way to get your first project off the ground.
Okay, so you know about all these financial tools. But how do you convince a lender that you're the right person to give them to? Well, that brings us to what is, without a doubt, the most critical part of your prep work, your business plan.
A really solid business plan is built on 4 pillars. First, it's purpose. Who is this property for? What are your goals? Second, it's history. What's the story here? You need to document its age, its condition, everything. Third, improvements. What needs to be fixed or upgraded? Detail your plan and, more importantly, the costs. And finally, the projections. The numbers have to make sense. You need realistic forecasts for rental income and all your expenses.
And right alongside that plan, you've got to gather all your paperwork. I'm talking personal and business financial statements, a full schedule of your assets and liabilities, proof of where your deposit is coming from, your tax returns, your business registration docs, all of it. Seriously, being organized here is absolutely non-negotiable.
Oh, and one more crucial detail that can literally make or break your entire project: location and zoning. Your whole plan has to line up perfectly with the local municipal regulations. You can't just build a factory in a commercial zone, and you can't open a shop where it's zoned for industrial use. You can get all that info from your local municipality, so do your homework.
So, you've done the homework, your plan is rock solid, now you have to face the gatekeepers. Let's try to look at this from the bank's point of view. Not as some big obstacle, but more like a series of trials you have to pass to prove your project is really sound.
Now here's where it gets interesting. Check out this advice from a United Nations Institute. They say, for borrowers, the fewer pre-disbursement conditions, the better. Basically, they're arguing that too many rules and requirements can just needlessly slow a project down.
So that begs the question, right? If the experts are advising fewer conditions,
Why does it feel like banks have a whole mountain of them? Why so many hoops to jump through before they'll release a single cent of the money? Well, the answer comes down to one thing: managing risk. You see, banks use what they call the 4 C's to assess the risk of every single loan application. First up is character. What's your credit history like? Next is cash stake or capital. How much of your own money are you putting in? They want to see that you've got skin in the game. Third is capability. Can you actually afford to repay this loan? And finally, collateral, the property itself which secures the whole deal. And here's the thing you have to remember. Those conditions aren't just there to protect the bank. They're actually there to protect everyone, and that includes you. A geotechnical report makes sure the ground you're building on isn't going to collapse. Approved building plans confirm you're following safety and zoning laws. A signed services agreement guarantees you'll have water and electricity. These conditions are what stop you from making a catastrophic mistake.
Okay, once you've cleared all the bank's requirements and that loan is officially approved, you are in the home stretch. Now it's just a matter of navigating those final administrative hurdles to make it all official.
This final legal dance has 3 main steps. First, there's the property transfer, where an attorney officially puts the property in your name. Second, you've got the bond registration, where another attorney registers the mortgage against the property's title deed. And finally, FICA compliance. This is basically a background check to verify everyone's identity and make sure the whole transaction is above board and secure.
Now, one of the last and, let's be honest, one of the biggest hurdles is the deposit. For a house, you might put down around 10%, but for a commercial property, you are typically looking at 25%, maybe even more. That higher personal investment is a huge part of why commercial finance is considered the big leagues.
And there you have it. Look, the journey from having a dream about a commercial property to standing in the finished building is a massive undertaking. There's no sugarcoating that. But as we've seen, if you have a solid plan, you secure the right financing, and you do your homework, it is an absolutely achievable path to building real, long-term wealth.
So I'll just leave you with this one thought. Your property dream is all planned out in your head. The only question left is your paperwork ready to make it real? Good luck.